If you're thinking about buying your first home in Ontario, I want to tell you about money that is essentially sitting on the table right now with your name on it. Money from the federal government, money from the provincial government, and money from the city of Toronto if that's where you are buying. Most first-time home buyer I talk to either don't know these programs exist or they know the name of one of them but don't understand how to use it and how they stack together. By end of this video, I guarantee you have a clear picture of every major first-time homebuyer benefit available to you in Ontario right now and rough sense of what it could actually mean for your finances. Let's go. The biggest one and the newest one is the First Home Saving Account, the FHSA. This is launched by the federal government in 2023. And honestly, it's one of the most generous saving programs Canada has ever created for home buyers. And it is still wildly underused. Here's how it works. If you are a Canadian resident, you are at least 18 years old, and you have never owned a qualifying home, meaning you have been renting or living with family, or you haven't owned a home in the last 4 calendar years, you can open an FHSA account and contribute up to $8,000 per year with a lifetime maximum of $40,000. Now here's where it gets really good. That $8,000 contribution is fully tax deductible. Meaning, if you contribute $8,000 this year, you claim it on your tax return and you get a refund based on marginal tax rate. If you are in 40% combined federal and provincial tax bracket, here in Ontario, that's $3,200 back on your tax return from a single contribution. And while the money is in the account, it grows completely tax-free. When you use it to buy your first home, it comes out tax-free as well. Compare that to a regular saving account where you are paying tax on the internet, or even a TFSA where contributions aren't deductible. The FHSA gives you the deductibility of an RRSP and the tax-free withdrawal of a TFSA combined, but only for your first home purchase. It is genuinely exceptional program. One thing you know, if you don't end up buying a home, you can transfer the money into your RRSP without any tax impact. So there's no downside to opening one even if you are not sure yet. An unused contribution room does carry forward up to $8,000 in carry forward room. The second program is the Home Buyers Plan through RRSP. This one has been around since 1990s, but it was enhanced significantly in 2024. It allows first-time buyer to withdraw up to $60,000 from their RRSP tax-free to use as a down payment. If you are buying with a partner and you both qualify as first-time buyer, that's up to $120,000 combined. The repayment works like this. You have 15 years to pay it back into your RRSP, starting with 5th year after your withdrawal. You're essentially borrowing from your future self interest-free. If you don't repay a given year schedule amount, it just gets added to your taxable income that year. So there's flexibility, but there's also accountability built in. And here's the thing most people don't realize. You can use the FHSA and home buyers plan together. If you have $40,000 in your FHSA account and $120,000 between you and your partner in RRSPs, you could theoretically have access to $140,000 in registered savings for your down payment. On a $700,000 home, that's a down payment of exactly 20%, enough to meaningfully reduce your mortgage insurance cost or avoiding them entirely. Let's talk about 2 more important things that hit first-time home buyer really hard in Ontario and the rebates that offset them. First, land transfer tax. In Ontario, when you buy a home, you pay a provincial land transfer tax on closing. On a $700,000 purchase, that's approximately $10,475 if you are buying in the city of Toronto, and a lot of people are, and in areas that fall under the city's jurisdiction. You pay second municipal land transfer tax on top of that. Another roughly $10,475. So you could be looking at over $20,000 in land transfer tax on closing, in addition to your down payment and other closing costs. The good news, the first-time home buyer gets a rebate. Provincially, you can receive up to $4,000 back on your Ontario land transfer tax. In Toronto, you can receive up to an additional $4,475 back on your municipal portion. So combined, that's up to $8,475 in rebates, money that come back to you at closing and reducing your out-of-pocket cost. Second, CMSC mortgage insurance. If your down payment is less than 20% of the purchase price, you are required in Canada to purchase mortgage default insurance through CMSC or one of their competitors. The premium is calculated as a percentage of your insured mortgage and gets added to your loan balance. For example, on a $700,000 home with 5% down, your insured mortgage would be $665,000 and the insurance premium would be approximately 4% of that. So about $26,600 added to your mortgage. This isn't a cost you pay upfront. It's rolled into your mortgage. But it does mean you are borrowing more and paying interest on that extra amount over time. The way to minimize it is to get your down payment as high as possible. Every percentage point closer to 20% save you substantially on the premium tier. The point of this video is simple. The Canadian government has created real financial tools to help first-time home buyer to get into market. And most people either don't know about them or don't know how to layer them effectively. And FHSA open today start building contribution room immediately. An RRSP home buyers plan withdrawal at the right time can dramatically change your down payment picture. And knowing about land transfer tax rebates could mean the difference between having enough cash on closing day or scrambling. If you are in the planning stage of a first home purchase in Ontario and you want to sit down and map all of this out of your specific situation, income, savings, target price range. I do free first-time buyer consultation for mortgages and I would love to help. Link is in the description. Subscribe if you want more of this content and I will see you in next video.